Hello and welcome to the paid weekly recap for the week ending November 21st, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, CEO and founder of Yellow Tunnel, and creator of the artificial intelligence behind the paid system. Before we get started, normal disclosures, options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for the past week. So first things first, the 10-year yield, really still very much range bound, staying around that 4.1% level. Looked like we were going to see some higher levels for interest rates on Thursday, and then they came back down on Friday. Really not moving much out of the range of about 405 to 415. Current support seems to be around 4%, resistance at 4.2%. If we break out above 4.2%, I expect to see a range of 4.2 to 4.4. Ultimate big support or big resistance at 4.6. Ultimately, we're closer to the 4% level, and that would normally, for me, indicate some concerns over economic growth. And right now, we are closer to that, but not breaching it. For now, a very stable bond market. And that's, I think, key for this market to help keep it from getting into liquidation mode. And speaking of the bond or the equities market, we've got the S&P 500 appeared to look for a potential breakout on Thursday. We had positive NVidia earnings. We had some non-farm payrolls that seemed fine going back to September. Economy looks okay. NVIDIA looks okay. And then the market took a hard reversal during the day on Thursday. Friday found support. We did make a new low prior. We did test the waters below the 100-day moving average. Found some support and bounced back. Overall, this market is very, very much on the cusp of a potential for liquidation, but continually finds that buyer that's willing to help bring the market back from a brink of disaster. We are in a much weaker stance overall. We are not breaking out to the upside. We are not a calm market by any means. We're getting larger ranges recently. These are things that are concerning for the broad market, but overall, the market has not fallen into a falling knife type setup or a major liquidation quite yet. Tech lagging a bit. And this is where the concern comes in. Tech growth forecasts, tech earnings forecasts, tech valuations seems to be driving the market pullback. Now, tech had been the sector that generally over the last decade plus has been most heavily allocated, people looking for that growth. But if valuations are now too frothy, people are concerned that maybe it's time to take a little step back, reevaluate, maybe reposition in other sectors. And tech is the sector that needs to be firm to show that there is risk tolerance. And right now, it's certainly not. It did close above the 100-day moving average on Friday, but not by much. And finally, we have small caps. Now, small caps have been a laggard for a long period. We did have a nice trend from August through October. But it got weak soon after, as we entered into November. We did test below the 100-day moving average. Friday was actually more bullish for small caps than for tech, as we had the inside day. So we didn't make a new low. We closed above the 100-day moving average. Some of this rotation that occurs within the recovery of the market. And finally, we have the VIX. The VIX got close to the highs from mid-October, not quite. Close to 30, not quite. Little pullback on Friday, not back below 20. We are still in a fear mode overall for the VIX. Now, with that, we had a couple of paid trade ideas this week. On Tuesday morning, we had the buy in HP post earnings. Now, I didn't buy right on the open because the option liquidity wasn't quite there, but entered into the December 30 calls during the bounce back during the day. Now, the stock from the open on Tuesday was up about 6%. From the point of entry on the options, up a little bit less, but ultimately the implied volatility continued to come down post earnings as normally does occur. We were looking for a bigger bounce back, frankly. And that bigger bounce back did not occur partially because we had general market weakness. We had some oil sector weakness, and this is in the energy sector. So a small loss in HP, relatively speaking, it is still a loss. And that is widely due to the compression in implied volatility post earnings. Earnings implied volatility had been reduced somewhat Tuesday morning, but ultimately there was more room for that implied volatility to fall, and the bounce back wasn't quite as aggressive as needed. On the other hand, we have NUE. Nucor was very bullish throughout the week. We had a little bit of pullback on Thursday as the market was getting close to that point of selling everything, but a strong bounce back on Friday, closing near the weekly highs. So from the Tuesday entry at 147.61 on the open up until 152.35, the stock was up about 3.2%. The options up about 33%. So look to reduce half to book some profits, hold the other half through Monday, and take the exit then. Now, I need to note, in paid, we have made some modifications going forward. After some extensive backtesting and a lot of reevaluation, particularly given the current market chop, we're just not seeing a lot of extension to the upside right now. We are finding that the signals have been very reliable to limited downside, but not necessarily to the continued upside because the market's not providing that tailwind. So as a result, we're going to be making a modification starting this week with a put credit spread on Mondays for a couple of trading ideas. So we'll have two new ideas tomorrow morning instead of Tuesday morning. They'll be via put credit spreads on weekly options. Now these are the compounding return high probability of success type trades. As we navigate the week, we will look at opportunities from a call basis to look for more leverage. Remember, these are ideas that have been building up momentum and having a lot of investment flow. So dips do tend to be bought. If we get that dip, we'll reevaluate with some call side positioning. Otherwise, we'll look for that premium collection, high probability of success, reasonable good return on capital on a weekly basis, which will based upon the backtesting, improve returns over the long haul, as well as the probability of success on these trades. So we're going to start that up this week. Keep an eye out on Monday morning for those put credit spread opportunities. We've got a shortened week with the holiday this week, of course. Or not a shortened week, but we have a day off. We have Thursday off and Friday we have, well, I suppose a shortened day because we close early on Friday. So be aware of that as well. That can create some illiquidity at times if the market does get volatile. But we'll factor that in as we evaluate all these trading opportunities and look for some new implementation of these very powerful signals and ways for us to continue to reevaluate for the best possible return of the trade setups as they exist. And as always, make sure you're joining us in the live trading room. Part of this is driven by some of the concepts that we normally apply in the live trading room. Put credit spreads, call debit spreads, butterflies, calendars, etc. We're going to be focusing on the put credit spread side of things, the probability of success trade with still a good return on capital, and look for some ways to continue to leverage these ideas in the way that the market is giving us at this point. And right now, the market is simply not giving the returns that we normally would want from a outright call. And so we're adjusting as needed, as is always important in any sort of trading system. If you do have questions, you can always email me, keith@yellowtunnel.com, or email vlad@yellowtunnel.com. We're happy to answer any questions. If you can't join us on the live trading room, you can email us there. And please do join us on the live trading room. Again, it's 9:15 till 10:15, 10:30 Eastern time in the morning. Closing bell from 3 to 4 Eastern time. So definitely try to join us if you can. And looking forward to a great week and I think, very powerful new implementation of the AI system using the options. Thanks again, everybody.